Hi viewers, Dr. Vijay's Lectures and Accounting, lecture number 16. This lecture covers the posting of rectifying and adjusting entries at Sabu's firm on 31st January 2020, closing of all nominal accounts, preparation of final accounts, that is trading and profit loss account for the month ended 31st January 2020, closing of final account by transferring the balance, that is net profit or net loss, to capital account, and balancing of real and personal accounts. Please read slide 2 very carefully. All the ledger accounts starts with the balance brought down on 31st January after posting all the transactions up to date. That balance is shown in black color. Then the posting of rectifying and adjusting entries are shown in red color. Posting of closing entries for nominal accounts and a balance carry forward and brought down for real and personal accounts are shown in blue color to enable easy identification. Sabu's firm maintains cash book, so there is no cash account and bank account in the ledger book. The rectifying entries affecting cash account and bank account are to be posted in the cash book. The cash book shows cash in hand 27,950 and bank overdraft 9,700 before recording the rectifying entries. The rectifying entries recorded are: number 1, interest allowed by the bank on account $400 not recorded in cash book. The entry is bank account debtor to interest from bank account 400, posted in the debit side to interest from bank 400. The second rectification is bank charges $3,200 not recorded in cash book. The entry required is bank charges account debtor to bank account, shown under credit side by bank charges 3,200. The next is collection for sales $6,000 understood as collected digitally and recorded in cash book debit side bank column, now found not collected and irrecoverable, and so to be written off as bad debts. Entry is bad debts account debtor to bank account, posted on the credit side by bad debts $6,000. As a result of these postings, closing balance of cash continues to be same 27,950, but the bank overdraft changes to 18,500. Slide 4 shows the corresponding postings for the rectifying entries shown in the cash book. For interest income, the entry is bank account debtor to interest income account. It is shown under credit side of interest income account by bank 400. For bank charges, the entry is bank charges account debtor to bank account. The posting here is bank charges in bank charges account debit side to bank account 3,200. And for bad debts written off, the entry is bad debts account debtor to bank account. The posting in debit side of bad debts account is to bank 6,000. All these three accounts are closed by transferring to profit loss account, as these are all nominal accounts. For interest income account, it is closed by transferring to profit loss account, recording in debit side to profit loss account 400. Bank charges account is closed by transferring to profit loss account by the posting by profit loss account 3,200. Bad debts account is closed to profit loss account by the posting by profit loss account 6,000. As a result of these postings of these closing entries, all the three nominal accounts get closed. Slide 5 shows sales account and drawings account. Sales account, after posting all the sales for the month of January, shows a balance of 2,06,100. A correcting entry, sales account debtor to capital account $12,000. For sale of furniture, old furniture which was inherited wrongly recorded in sales account, That is posted in the deficit to capital 12,000. As a result, the actual sales is only 1,94,100, and sales account being a nominal account, it is closed by transferring the balance to final account, that is to trading account part. So the posting is in sales account to trading account 1,94,100. Sales account closes. Then comes drawings account. The total drawings for the month is 6,700. It is transferred to capital account. Drawings account should be closed at the end of the accounting period by transferring whatever balance standing into capital account. So the entry is capital account debtor to drawings account. It is posted on January 31 by capital 6,700, and so drawings account closes. Slide 6 shows capital account and interest on capital account. Capital account shows a credit balance of $66,000 before recording the rectifying and adjusting entries. The following rectifying and adjustment entries are recorded in capital account. First is to commission paid $3,000. It was not actually commission paid. It was amount owing to Gurumurthy, a supplier. One of the liabilities inherited, but was not considered while preparing opening entry. So it is corrected now through the entry capital account debtor to commission paid account. Second is to interest on drawings, $100. Interest, the adjusting entry for interest on drawings is capital account debtor to interest on drawings. Interest on drawings is an assumed income, so credited. The posting in capital account is to interest on drawings, $100. The next is to drawing 6,700. Drawings account has to be closed at the end of the accounting period, and whatever balance standing it to be transferred to capital account. That is for closing drawings account. This entry to drawing 6,700 is for closing drawings account. On the credit side, there are two postings. By sales, $12,000. The corresponding posting we have seen in sales account. It was a sale of old furniture, inherited asset but was not considered while preparing opening entry, and so the correction required is sales account debtor to capital account. Next is interest on capital, $300. Interest on capital adjusting entry is interest on capital account debtor to capital account. It is an assumed expenditure, so interest on capital account is debited. In capital account comes on credit side by interest on capital, $300. Finally, on the credit side, there is a posting by profit loss account 34,226. See, after preparing the final account, after finding out the net profit or net loss, that is to be transferred to capital account. That is how final account is closed finally. So, if it is profit, it will come on the credit side of capital account. Here, in this case, we have not gone through the final account. Actually, the final account of Sabu's firm includes two stages, trading account and profit loss account. Trading account is prepared for finding out gross profit, and that gross profit is brought down and then prepared profit loss account. Profit loss account shows net profit or net loss. Here it is net profit. So when it is closed, it comes to credit side of capital account. The posting entry is profit loss account debtor to capital account. As a result of all these postings, the closing capital balance becomes 1,02,726. It is brought down to the credit side on February 1st. Interest on capital account shows the corresponding posting. Interest on capital account debtor to capital account, so comes in deficit to capital account 300. Interest on capital account is an assumed expenditure and so nominal account to be closed by transferring to profit loss account. By profit loss account 300. It closes. Slide 7 shows interest on drawings account and commission paid account. Interest on drawings account was a new account created through the adjusting entry capital account added to interest on drawings account. Its posting comes on the credit side of interest on drawings account by capital 100. The corresponding posting we have seen in capital account already. Interest on drawings account is a nominal account. It is to be closed by transferring to final account. Here it is closed by transferring to profit loss account to profit loss account 100. The closing entries we have not studied actually. It will be discussed only in a further lecture. Here we are showing how the nominal accounts are closed by transferring to final account, either to trading account or to profit loss account. To which account each nominal account is to be transferred, whether to trading account or to profit loss account. That all we will study further in the next lecture itself. Now look at commission paid account. Commission paid account was an old account. The amount payable to Gurumurthy wrongly recorded as commission paid. It is corrected by transferring to capital account. The posting is capital account added to commission paid account. Posted as in commission paid account by capital 3000. Corresponding posting we have already seen in capital account. Slide 8 shows salaries account and outstanding salaries account. Salaries account was showing a balance of 8,000 on 31st January. The outstanding salaries is posted through an adjusting entry salaries account added to outstanding salaries account. In debit side to outstanding salaries account 12,000. In outstanding salaries account comes the posting on credit side by salaries account 12,000. The salaries account is now closed by transferring the balance standing finally, that is 20,000, to profit loss account. On the credit side we can see the closing entry posting by profit loss account 20,000. Salaries account closes. Corresponding post will come in profit loss account debit side. Outstanding salaries account is a personal account showing the amount owing to workers to whom salary is not paid. So that account represents a liability. It cannot be closed. It is balanced and brought down to February 1st. $12,000 balance, credit balance. Slide 9 shows wages account, local tax account and local taxes prepaid account. Wages account was showing a balance of 300. Wages paid during the month of January. Nominal account, so it is closed by transferring to trading account. By trading account 300. Now local tax account, taxes paid was 2,000, but actually for 1 month it is only 333. The remaining 1,667 is prepaid for the further months of January. We passed adjusting entry local taxes prepaid account added to local taxes. So the posting comes on local tax credit side by local tax prepaid 1667. The corresponding posting comes in local taxes prepaid account debit side to local tax 1667. The remaining balance in local tax account 333 belonging to the month of January, it is transferred to the final account. To the posting by profit loss account 333. Local tax account closes. In local taxes prepaid account, it is an asset account. It cannot be closed. It shows balance 1667 brought down to February 1st. Slide 10 shows commission due from Meadows account and commission income account. Both these accounts have become necessary because of the adjusting entry commission due from Meadows account added to commission income account. So in commission due from Meadows account, posting is to commission account 640. In commission income account, the posting is by commission from Meadows 640. Commission income account is a nominal account. It is representing an income. It is to be transferred to final account through the posting to profit loss account 640. Commission due from Meadows account represents a personal account. There is something receivable from Meadows. So that account cannot be closed by transferring to final account. That will show balance. So it is balanced by balance carried on to 640 and brought down to February 1 to balance brought down 640. Slide 11 shows James and Company account and Khan Brothers account, two customers of the firm. The amount due from James and Company is 47,000 and that due from Khan Brothers is 45,000. No adjusting entry or closing entry is affecting these two accounts. So the same balances are brought down to February 1st. These two together constitute sundry debtors of Sabu and firm. Slide 12 shows provision for doubtful debts account and provision for discount and debtors account. Both the provisions are created by transferring a part of the profit from profit loss account to the concerned provision accounts. So the entries required are profit loss account debtor to provision for doubtful debts 4,600. That is for covering any loss due to bad debts that may occur in the subsequent period. And next entry is profit loss account debtor to provision for discount and debtors 1,748. That is for covering a loss due to discount that may be allowed in that subsequent period out of the debtors of current period. Both these accounts are not nominal accounts and cannot be closed. The balance ought to be brought down to the next period. So, provision for doubtful debts account shows a credit balance of 4,600 and provision for discount debtors account shows credit balance of 1,748. Slide 13 shows furniture and fittings account and depreciation account. Furniture and fittings account was showing a balance of 23,000 as on 31st January. Depreciation is to be provided for it at a rate of 20% per annum for 1 month. It is 383. The adjusting entry is furniture and fittings account added to depreciation account. It is posted on the credit side of furniture and fittings account by depreciation account 383 and in the debit side of depreciation account to furniture and fittings 383. The furniture and fittings account is a real account. It cannot be closed. The balance is brought down to February 1st, 22,617. Depreciation account is a loss account, a nominal account. It is to be closed by transferring to final account. It is closed by transferring to profit loss account by profit loss account 383. Slide 14 shows stock and trade account and loan from Azad Bank account. Regarding stock and trade account, we have seen already that neither purchase nor sale of goods or any other transaction in goods is recorded in stock and trade account. As a result, the opening stock will be shown in stock and trade account till the end of the accounting period and will come in the trial balance prepared at the end of the accounting period even. Here it is 36,000 to balance brought 36,000. That opening stock is closed at the end of the accounting period by transferring to trading account by the entry trading account debtor to stock and trade account. The posting comes on the credit side of stock and trade account by trading account 36,000. The closing stock we know is taken at the end of the accounting period through physical stock verification and that is brought to the books through the entry stock and trade account debtor to trading account. So it comes in debit side of stock and trade account to trading account $30,000. Correspondingly, in trading account, opening stock will come in debit side to stock and trade account and closing stock will come on credit side by stock and trade account. Coming back to stock and trade account, see that as a closing stock is brought to the books, it will be showing balance at the end of the accounting period and is brought forward to February 1st to balance brought down 30,000. Loan from Azad Bank account, there was no transaction during this period on that account and so the same balance 14,000 is brought down to the next period. It is a liability. Slide 15 shows discount received account and discount allowed account. Discount allowed account is a nominal account. It is closed by transferring to profit loss account $800 by profit loss account $800. Discount received account is a gain account. It is also closed by transferring to profit loss account $600. Slide 16 shows purchases account, Joji traders account. None of the rectifying or adjusting entries affect these two accounts. Therefore, the balance standing on 31st January after recording the transactions up to date itself is carried forward to But purchase account is a nominal account. It is closed by transferring its balance to trading account. Joji traders account is a supplier's account. it shows credit balance. It is brought forward to February 1st. Slide 17 shows in-restaurant bank account, returns inward account and returns outward account. No rectifying entry or adjusting entry affects either of these three accounts. In-restaurant bank loan account is a nominal account closed by transferring its balance to profit loss account by profit loss account 2250. Returns inwards account is again a nominal account closed by transferring to trading account by trading account 1900. And returns outwards account is closed by transferring to trading account to the posting to trading account 700. Slide 18 shows the trading account, the first stage of final account. We know in a trading firm under single ownership, the final account should have two stages, trading account and profit loss account. The trading account and profit loss account evolves automatically where the corresponding posting for the closing entries of nominal accounts are posted. Which and which items will come in trading account and which and which items in profit loss account we will study in the next lecture. Now just see the trading account shows stock and trade, opening stock, purchases less returns and wages in debit side, and closing stock and sales less returns on credit side. It shows gross profit 70 to 100. This gross profit is brought down to profit loss account. The lecture concludes with the slide 19. Please subscribe if you have not subscribed so far and share to whoever wants to learn accounting. It will be the best gift that you can give to such people. Your comments and likes are welcome. Thank you for your participation till then with close attention. This profit loss account starts with gross profit brought down from trading account 72,100. If it was gross loss, it would have come into debit side. Then all expenditures and losses which are not shown in trading account debit side are shown here. All incomes and gains other than those shown on trading account credit side are shown here on credit side. It finally shows a net profit of 34,226. If it was net loss, it would have come on the credit side. Whether net profit or net loss, it is transferred to capital account and thereby the final account is closed.